Good afternoon, everybody, and welcome to the recap. I'm Laz, filling in for Scott. Today, earnings. So many interesting things to talk about. Let's just jump right into it here. S&Ps, the old S&Ps, our old friend, Mr. S&Ps. Let's take a look at the spiders here. We've been talking about this for just what seems like decades. Really tough trading pattern. Market's been in for basically 8 to 10 weeks. Very choppy, non-directional, non-committal. And that's the way markets are. Markets can be directional. There are three trends: uptrends, downtrends, and sideways trends. And this is a great example and a great learning environment for those that have never seen this type of action. And I always think about it as a calm before the storm. And the storm can sometimes be a beautiful bullish trend, and the storm can be, a major breakdown. But I do anticipate, some large directional market move happening at some point in the not too distant future. All signs at this point would say, we probably would go lower, and I'll get into that here. I love this pattern in a sense that it's very defined. It's got an upper resistance area. It's got a lower boundary. Trend line trading can be very fickle in the sense that, one man's trend line can be another trader's, one man's trash is another man's treasure type of thing. And is the trend line here? Is this support? Is this support? Is this support? It's not really what's important. What's important here is not the trend line or did we break, support is, I think more of these averages, how price reacts here over the next couple of days as these averages, which have flattened out, look like they may start to turn lower, push down. As far as stocks go, we've seen a lot of selling post earnings here. So although it's not reflected in the overall markets, we got to keep our eyes on how this earnings season progresses. Some stocks that have been oversold or have just seen massive selling, catching a little bit of a bounce into earnings, a la Baidu, and some others. But other ones, just seeing, an incredible amount of selling here. So I am keeping a very watchful eye on this chart. And the weekly chart here, again, bear flagging. And this is where, it gets interesting. Because if you look at the S&Ps, this is really where we get this interesting pattern. I'm going to show you the S&Ps. I'm going to show you Apple. Because on the weekly, we get this massive selling. And then we get this snapback. Now, as this snapback, this is really the point of inflection. Is this a lower high that eventually breaks to another low? Or is this some pattern that eventually, rallies and takes out prior highs? I think this point right here in the S&Ps, which is right around 138, in the spiders, is really the most important level. And if we can really muscle through there, then I think we'll see new highs again. But, and we'll look at Apple here just to do a compare and contrast, right? Apple, same kind of thing. You get this bout of selling, then you get a snapback. We make a lower high. Now we turn down. Now the question is this a trade that, we'll find some sort of short-term support down here and turn back up? Or is this a trade that will eventually give us another directional move down? Now, my inclination here is that we'll probably see a larger move down. And should we take out this 520 level of support, which at this point is still another $50 lower and not worth discussing right here, right now, it's a point we need to keep on the radar. This to me is what could be and I'll take the lines off here just to make it sort of clear, a classic bear flag pattern. Just, very tight, controlled, upward ascending channel that makes a lower high. And this stock, you can make the argument we're way off the longer term trend line and, there's a pocket of air below 520. If you see below 520, should we breach those levels, there's room to trade back to support. And I'm going to call that first level support down here, right around this breakout, which was about 425 at 430. So there is room to fall here. Apple traders, keep a watchful eye on how this develops. It's not going to unravel in one day. It's going to unravel over a series of weeks and months. The daily chart will really be the tell. We talk about Apple today, and you can see all the annotations. Gapping down today, very difficult trade for those that were intraday day trading. And I'll look at a 5-minute chart just to give you a better sense of intraday. Here's a 15-minute chart. The first move was up. Right off the open, we rallied up. We came back to the lows, and over the course of the day, a lot of people were getting short in here, myself included. Unfortunately, the stock came all the way back to the high of the day, retesting those highs, and then selling off again. So ebbs and flows here, not a very committed type of trading day unless you are, actionable at highs and actionable lows, which is a very tough thing to do. Being a buyer at the dead low of the day is a very tough trade, as is being a seller here at the very high of the day. I think you need to look at hourly charts in this environment. When stocks tend to break away, and this is just a bit of education for those that are interested, when you get these large directional gap downs, and you can see here on the E-signal, it's basically, it's reflected. Here you go. Big gap down. You got to wait for these averages to catch up, because as the stock is down here, your 8-period MA is up here, your 21's up here. Notice when the stock really starts to turn back down, it's when it rallies back into the declining average that it then begins to turn down. So we'll keep an eye on some hourly charts here, because when you get these large, breakaways, Apple down 5% at the open, or stocks up 10%, or so on and so forth, you get these, it can be very much of a tug of war type of trade. For those that are intraday centric or momentum oriented, it can be very, very difficult. So we'll keep an eye on how these averages, play into the stock over the next couple of days. As far as we go back to the daily here, our first level support in Apple's down here around 565. I think we'll probably test into there, not in the not too distant future, and then maybe we'll see a little bit of a bounce and see how this sets up. But right now, it's still a very difficult pattern to trade here. You could make the argument that we could, and I'll take the lines off. We could get a little, 3-day rally back into these, averages here on a daily chart. You have this big open gap here, and you could probably make the argument that we could take out support here at 565. Either way, I think this trade needs time. It needs time to develop. This is a highly traded, highly watched, heavily institutionally owned symbol. There's a lot of eyeballs and a lot of money here, and it needs time to set up. It's not just going to, drop, 10%, 20% in one given day. It's going to set up and develop over a course of multiple days and weeks. So we'll keep an eye on how this structure develops. Netflix, another earnings trade today. Straight out to the woodshed today for Netflix. While it looked great, and again, this is the turbulent market that we're in. The beginning of July, there were so many bulls here trying to buy this consolidation, and now we're back to lows. Let's go to the weekly. Right back to the area of support down here at 60. There's nothing good here. This is a stock that looks like it wants lower. So we'll keep an eye. Excuse me. Apologies. Most people don't sneeze on camera. I guess I do. $60, it's been our benchmark support, flirting with breaking it today. The daily chart, we'll go back to it. We'll keep an eye on this again, stretched here off the averages into support. You could see a little, 3-day bounce here, but this is not a healthy looking stock. This is a broken chart that says to us it wants lower. A couple other earnings plays today. Riverbed, RVBD. Not much to talk about here. Large gap up post earnings, but no real trade. Big giant doji on the day. We opened and closed at the same spot. Buffalo Wild Wings, BWLD. Again, another earnings trade. Not really seeing much in terms of the intraday, opening and closing in the same spot. Lots of indecision. While you might see these thrust, again, go back to our intraday charts, you're seeing these, big moves up and these big moves down, but the closes are relatively, flat. So you're not seeing a whole lot of follow through intraday, making that intraday trading a little bit tougher. Again, my suggestion, go out to some of your higher time frames. Stay with these trades a little longer. Let them, develop on some of the analytical time periods. So again, those are some of the earnings trades today. A couple other stocks to just take a look at. Banks, we're going to look at Goldman here. Let's go to the daily. Again, range trading is a very difficult trade. $90, just above 90 is the actionable support area. A little bit of a bounce. Goldman tried to break out of this range up here around 100, came right back to the lower end of the range, and now we are just dead center in the middle of this range. This is a trade I would avoid until you get some sort of volume, push through the highs or push through the lows. The longer that we sit and we base, middle of May, June, July in this range, the more powerful the breakout is going to ultimately become when we do either break down out of this range or break out of this range. So keep an eye on that range as it develops day in and week out. JP Morgan, we had earnings about 6-7 days ago. The stock's in the same place. The 21 EMA here is dead flat. There's just no reason to really be here. Last Thursday we did the Stock Twits Q&A recap. We covered this. It's the same trade it was back then. I talked about a 21 EMA, LinkedIn. These are the type of trades you have to be very careful. As you spend a lot of time trading a stock that's not directional, you're going to spend a lot of time wasted. And you're better off buying and selling stocks that are potentially trending higher and trending lower. We'll take a look at Walmart as an example. This is an example of stock trending higher. This is where opportunity is and money is made more consistently than not than trying to buy a stock that has a flat 21 EMA. So little education there, a little active trader course material there for you. As far as the market goes, we'll go back to the spiders or we're even going to the Dow for a second. Here's the diamonds. Keep an eye on how this develops over the next couple of days. This to me, I suspect we might break this lower level of support right down here around 124. In the spiders, again, I suspect we're trying to break out of this pattern. And although the pattern isn't that clear on a daily chart, go up to your weekly. Weeklies will provide you more clarity. And again, for a market that is very indecisive and very choppy, a little clarity goes a long way. I had a discussion today with one of the traders on the floor here about Priceline as an example. PCLN. And I said, the daily chart, as fragmented as this looks, you get all these ebbs and flows. Week to week, just changes of pace. The weekly chart, to me, tells you a story of weakness. We had this double top back here at 770. We got that initial sell-off. We bounced. We put in a pivot, a lower high here at 700. And this, to me, is just consolidating and looks like it has the potential to trade lower. Now, earnings are August 7th, so we'll keep an eye on that. But this, the weekly provides clarity. So sometimes you're stuck in a market that's very choppy or it's not really giving you the results you so desire, go up a time frame. Try to get more clarity in what you see and how you see it. It really goes a long way for maintaining patience and staying on the right side of the tape. That's my little food for thought for the day. I'm going to call it a day. I am fried. Personally speaking, it was a long trading day. As always, a planned trader is a profitable trader. The Red Dog will be back tomorrow morning, and I will talk to you as always on the BTF. Have a great day, everybody.